Okay, so now let's move on to the definition of note payable. Okay, so how do we define note payable? Okay, as what I said earlier, that note payable is presented by a promissory note. So what is a promissory note? A promissory note is an unconditional promise in writing made by one person to another. Okay, signed by the maker. So what do you mean by maker? The maker is the issuer, the debtor or money ang mangutang, okay, engaging to pay on demand or at fixed or determinable future time. So there is a pay on demand or determinable future time. So what is the difference between the two? Okay, when we say pay on demand, the bearer or the creditor has the authority to request kano sa niya pabayadan ang utang ni maker. Like for example, if mingon si creditor na you should pay your credits within this month, okay? So wala mabuhat to si maker because under the contract it was written pay on demand. So the bearer or the creditor has the right, no, to demand kano sa ibayad ang utang or determinable future time. When I say determinable future time, this is actually the most common. There is a maturity date, okay? There is a, specified period kung kanus adjud mo bayad si maker sa iyang utang, plus the interest, okay? Okay. So, a sum certain in money to order or to bearer. Okay. On the right side, we have our promissory note. Okay, this is an example of promissory note. I have just downloaded this one at Google. So there are a lot of forms or formats about promissory note. So this is just an example. Okay, so there is written is that there is I, the maker's name. Okay, this is the debtor. Agree and promises to pay his name. So this is the creditor. Okay, or order the sum of euros in Filipino, of course, it is peso, for value received with interest at the annual rate of blah 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 and blah blah blah. Okay. Under below there is a maker signature. Okay, as what the definition states, that is signed by the maker. So there is a signature signed off by the maker. Okay. Now let's proceed to the initial measurement of note payable. So how do we measure the note payable at initial or first entry? Okay. Um, as what I have stated earlier, that um, note payable is classified as a financial instrument. What do you mean by that? When it is a financial instrument, it actually falls to PFRS 9, or this is what we call the Philippine Financial Reporting Standard 9, okay? The paragraph 5.1.1 provides that a note payable not designated at fair value through profit or loss shall be measured initially at fair value minus transaction costs that are directly attributable to the issue of the note payable, okay? So please don't mind the typographical error there. Okay. Okay. So it states that if it is not designated to fair value through profit or loss, we will measure it initially through fair value minus transaction cost. So if it is not stated to use a fair value through profit or loss, we will use fair value minus transaction cost. In other words, transaction costs are included in the measurement of note payable, okay? Because in the fair value minus transaction cost, the transaction costs, which are directly attributable to the issue of the note payable, are deducted in the fair value. So part siya sa pag-measure nato sa note payable. However, there is a however, okay? If the note payable is irrevocably designated at fair value through profit or loss, so stated sa problem na we are going to use this a fair value through profit or loss, the transaction costs are expensed immediately, okay? The transaction costs are no longer part or included in the measurement of note payable. Because if we're going to use a fair value through profit or loss, kung mo na atong gamiton, ang transaction cost is an expense outright, okay? Na siya laing part nga or account title nga i-appeal, okay? It is already expense. Kung fair value through profit or loss itong gamiton. Pero kung fair value minus transaction cost, then transaction cost will be used in measuring the note payable. Okay? So we have the fair value of the note payable is equal to the present value of the future cash payment to settle the note payable using market rate of interest. Okay? It's stated that the fair value is equal. Okay? There is the value of present value and the fair value is equal to the future cash payment. So the settlement, the whole or the total settlement of the cash that was borrowed, okay, is the equal amount for fair value and present value, okay? Using market rate of interest, okay? We're gonna use this market rate of interest or the effective rate. Okay, let's move on. Since it was already discussed in bonds payable, it will be um, easy for you to understand, okay? Okay, so we have subsequent measurement of note payable after the initial recognition, okay? Stated in PFRS 9, paragraph 5.3.1 provides that after initial recognition or the initial measurement, a note payable shall be measured through amortized cost using the effective interest method. As what I said earlier, if you really understood the effective interest method discussed in chapter 6, is um this is an easy topic for you. This will be an easy for you since the the effective interest method was already discussed and we are just going to apply that method here in note payable. Okay, letter B, at fair value through profit or loss if the note payable is designated irrevocably as measured at fair value through profit or loss. What do you mean by this? um we're going to be subsequently measuring it if it states or if it designated irrevocably, it is undesignated, it is designated that we will measure it at a fair value through profit or loss. Okay, okay,